Hey, good morning on the West Coast. Good afternoon on the East Coast. I am broadcasting live out of NBA Annual National Event. Dave Savage, CEO of Mortgage Coach. We have John Downs.
How are you? Thanks for coming to my town, Dave. This is awesome. I'm excited.
Yeah, it's super stoked to have you. Also, I had Jim McQuaig. Jim, come over here and say hi to everybody. Got Jim McQuaig, one of the regulars in the Mortgage Coach community. This mastermind is all about the seller buy-down strategy. Obviously, interest rates are going up, as everybody knows. And my goal at Mortgage Coach is to leverage our amazing community of America's best loan officers to help everybody learn faster. How can we learn mortgage strategies that help you differentiate, help you create value, help you sell homes, and how can we all just learn faster? So I've invited Lori Richardson to the call. Lori is coming to us live from Denver, Colorado. What's up, Lori?
Hey, how are you?
Good. It's good to have you.
Nice.
We've got Danny Harani, who's usually in beautiful San Diego, but he's in Nashville today. Hello, Danny.
Hey, guys.
It's good to have you. I have interviewed Danny countless times. I may reference some of those interviews throughout this call, and I thought we couldn't talk about mortgage strategies without having Danny, so thanks for joining us, buddy.
My pleasure. Glad to be here.
We're going to have Jeremy Forcier join us in the last 15 minutes of the call. He's in a realtor meeting right now. And when he gets done with that meeting, he's actually talking about a seller buy-down. He's going to talk about how he's leveraging this. And to kick off this mastermind, I want to bring Scott Nicholson onto the screen. How you doing, Scott?
Good. How are you?
Good, brother. Hey, so for anyone who has not watched an interview with Scott Nicholson, highly recommend it. He really was the pioneer of the seller buy-down. What year was that, Scott, that you first brought the seller mortgage company?
I think, it was probably the fall of 7.
Fall of 07.
Yeah.
So Scott was, has always been this great mortgage strategist, and he's the one who really brought us the idea. I think most people know the way we evolve our product and the way we evolve Mortgage Coach is from you. The ideas that you give us, we put into all the way we improve the product. In fact, on our support page, there's a suggestion box. So if you have ideas and suggestions, you can post those on our support page. And by the way, community, you can vote. Like the ones that you want the most, they come. And back in 07, the seller buy-down is what the community wanted. So we actually created a seller buy-down analysis. So there's the total cost analysis, and you could present a seller buy-down in the total cost analysis. And then we created a special presentation back in 07 because there were just some unique ways in which Scott was presenting it that we thought would help realtors sell more homes. And by the way, when a loan officer can help a realtor sell more homes, you get more referrals. So Scott, why don't you share a little bit about your backstory on that, and then walk us through a seller buy-down and how you're leveraging it right now in today's market.
Yep. And so, you did a great job of just kind of setting that up. It evolved as the capital markets are collapsing in 07, 08, 9, and so on. And, I had to figure out a way to keep the market moving, to keep the buyers, to keep the transactions, affordable. So that was my play into the market. It's gone away just as, as rates have basically fallen, inventory light. So now that we're in a transition, with higher rates and inventory starting to creep into play, affordability kind of getting out of reach, I've dusted it off, and I've given some examples of ones I've just closed recently and how I frame those, how I did it. And there's several different angles in which you can attack and help problems. And what's really great, and I think with this webinar today is really critical, not only for the loan officer, for the real estate in general. And I'll give you an example or analogy. It's kind of the Game of Thrones analogy to where there's evil on the outside of the gates. We'll call them the Night Walkers or whatever they're called, right? So we're inside that gate, and those Night Walkers analogy is the purple bricks, the Amazons, the Zillows, the iBuyers, right? And if we don't do anything inside of those gates, they're coming through, and they're already through. And I think understanding this strategy and taking it to your agents and helping them And I think what we'll get across today is understanding and teaching the loan officer the strategy and how to use it. You're becoming the LO, the integral part of structuring transactions in today's market with your agent, meaning with this strategy, you're going to keep these commodity type evils outside of that gate and blanket your farm and your agents and so on and so forth. So I think it's really critical to take this to market with that. So,
Hey, Scott, two things. One, I want to address everybody who's on Facebook Live. We're seeing more and more members engaging on Facebook Live. What's up, Tony? What's up, Monica? Also, guys, what makes this a powerful mastermind is if you ask questions. So if you're on Facebook Live and you have a question or there's a takeaway, share it. And if you're watching us live on Zoom and you have a question or a comment, put it in here. While each of the guests are prepared to deliver a strategy and walk you through it, we want to make sure you get your questions answered. And I also want this, next 50 minutes to be so comprehensive that I can, just like I did with the lead conversion playbook, we want to be able to write and create a seller buy down playbook. So guys, unpack everything you want to know about the seller buy down, engage. So Scott, I don't know if you have anything else you want to share, or do you want to just open up the seller buy down and walk us through?
yeah, I think that just kind of frames it up as Roberto taught us. So let me go.
Remember, everybody, pre-framing is just as important as the story of the strategy. So when you show the seller buy down to an agent, what you say in a minute to 2 minutes beforehand can sometimes be more important than actually showing the seller buy down. So I want everybody who's a guest, try to frame it, give everybody on this call some leadership and framing, and then walk them through the strategy.
Right, exactly. Yep. Let me go ahead and pull that up.
And boom, we see the Mortgage Coach website.
Okay, yep. Here's one we just did. So let me kind of frame this up a little bit. And I kind of gave you a lot of details on the Mortgage Coach page of what was going on here. There are 2 police officers. They found a horse property. He's on the mounted division of a local law enforcement. So, and that property has been sitting on the market for a few months. It's a little overpriced. And so I kind of just was brought in just as a casual conversation, and they just couldn't figure it out. And they had a long 20-year relationship with a broker. And so there's a lot of dynamics working there. And one of the key points here of this transaction was David is old school, and it was critical he get an affordability payment under $5,000. I mean, that's his budget. They're going to, she's retired, just retired with, some whatever, but it was $5,000, make it or break it. Scott, I don't care if we move forward this transaction if we can't get that payment. And not only that, is I had to net out a certain amount of this transaction. So I go, guys, I got it. Let me run some numbers. Let me figure this out. I'll get back to you. So I went ahead and plugged in the numbers in the buy down. So what this price or what this was going for, shoot, maybe I got the right one up here. I actually don't have the right one. Hold on a second.
No problem. Scott, how many of these seller buy downs would you say you've done in the past 30 days?
Well, shoot, I just did Hendrickson last night. I'll tell you that story. That's a brand new construction with KB Homes that ended up getting me into the sales manager at KB. So, and those are small ones, but I would say I funded 4 recently or 4 this quarter. And we've just structured Hendrickson last night. So let me pull up 1 second.
Yeah, I'll let you focus here.
Yeah. Oh.
So remember, community, if you have questions, if you have comments, let us know either in Facebook Live or in Zoom. It's kind of cool. We're getting more and more people following this, both the Tuesday and the Friday call. Not only do we broadcast them live in Facebook, but we're also, on Facebook and on Zoom. And I'm seeing more and more folks digging the broadcast on Facebook. So community, if you like the Facebook Live feature, let us know that it's a great feature. And if there's anything we can do to make it more interactive for you, let us know that too.
Hold on a second.
As Scott, as you're pulling that up, I took some quick notes here as you were kind of pre-framing everything. And I think that the big things that I pulled out of your pre-framing commentary were that you're really focusing more on the insight versus the information, and you're positioning yourself as a consultant with the partner. And I love how you position this as kind of a, I don't like this term per se, but you kind of made it an us versus them situation. And I'm a firm believer that the distributed retail model is a counterpoint to these centralized models, both in real estate and in mortgage. And if we can't implement strategies like this that truly add value to our clients, they'll have no reason to pick us over the white walkers that are out there. So it's critically important that we bring this value and continue to sharpen our skills around a consultative approach and an advisory approach versus that order taker mentality that is kind of pervasive in a lot of areas.
And that's exactly the point right there. And if you and this is just a tool, but it's a multi-level tool that you can help with, and we'll get into it in detail through this call. But that's exactly correct. That's the approach I'm taking. So here's the Buydown. Sorry, I had the wrong one click. So here it is here. So is in the first, I'll explain the Buydown. So what it is, I load the numbers up based on the market. We funded this in, what is it?
Could you go into full screen mode? It's kind of hard to.
Oh, yeah.
Just make sure it takes up the whole screen and make it bigger.
Yeah.
Actually, if you just click that little green thing in the upper left-hand corner, it'll take up your whole screen. The upper left-hand corner of your, yeah, you hit that little green.
There you go.
Boom. Thank you, brother. Okay.
So how this is the Buydown report I put together for Dave and Carol. I posted this on Facebook, and really simple. All I did was load in just a traditional transaction, which is the first column. So we had sales price $1,170,000. The down payment we're using $400,000, and that was a critical component too of working with the down payment. 30-year fixed, cash to close. So just basic numbers in the first column. And so the second column is, when I explain in the video, is the price reduction. And how I determine the price reduction is what I need on the rate sheet to get it to where I need them to be, right? So if I'm looking at my loan amount of $770 and my rate sheet at the time was 3 7/8, and it costed me X dollars, converted $26,000, then that's the number I plug in. I don't do a broad percentage. So that price reduction number is critical. We use that number correctly, if that makes sense, and I'll explain. So price reduction, and when they look at it, I go, okay, great, and this is your traditional, either think of from your listing presentation, this is your price reduction from your lister, or from a buyer's perspective, a lowball offer, right? So the $26,000 reduction saved them the $162, and it, the cash to close, and so on and so forth. But this is where the rubber meets the road in the third column. Give me the same $26,000. Give me a full price appraised offer at $1,170,000. Now look what I can do to rate. Look what I do to total payment. Now I've achieved David's goal with the money I'm allotted to close this transaction, and now I saved him the $395. And one of the critical ratios I always explain to my clients and agents is a 3-to-1 ratio. And they were deep when back in the day in 08, 09. And they'll get deeper as this market settles down, but I use the ratio of 3-to-1. And what that means is, for every dollar the seller gives me in rate, it's equivalent to $3 in price. So think of that. I can do way more with just $1 than what traditionally people think of taking it at $3. And so with that said, the fourth column, what the fourth column shows is to give me the same financial benefits. Look at the payment in 3 and 4, $49.64 a month to $49. But look what I had to do to price to achieve it. $75,000 price reduction is equivalent to the same financial benefits to the rate reduction. And when they get that, it's game over. So there we've structured the transaction correctly. And think of the different avenues in which I can come in and do it. This was simple. I achieved two things. The broker was quoting the 4 3/4, 30-year fix. I was structuring it as 3 7/8. I had to work with a $400,000 down payment because they were netting $489 about out of their sale, and they needed some money left over from small renos to the horse property. And I achieved David's personal budget, deal breaker budget of $5,000 or less. And I did it for less money, right? And so those are the key things. And not only that, those discount points are the buyer's deduction, right? So they're going to get the benefit there. Does that make sense? And so that's how I structure it. Not only that, the last tidbit there I didn't speak about on this one is the listing agent. We were going after the listing agent to try to double end it, and she was a little wavy and like, just kind of some funny math. I'm not sure they would do it. And so ultimately what happened, I brought in my agent to write the offer and list her property. So I brought in my agent. He made $64,000 on the closed transaction.
Love it. So before we bring on John Downs, I want to see Lori or Danny. Do either one of you guys have any questions for Scott, or has anybody seen any questions from the audience?
I love that, Scott. Will you repeat the 3-to-1? I want to take better notes on that.
Yeah, and so the number of the 26 derives from the day of my rate sheet, right?
Yep.
So I look on, okay, what do I need to get it down? And there's not a rule of thumb. It's just like, what do I need to, we run our own numbers basically based on like Dave's budget, for an example. I had to get under 5. So I needed this, and the market was bearing at the time. So I go, okay, at the loan amount we had and the percentage it was costed me, basis points, it was $26K. So that's what I load into the price reduction, right? And then Dave's software then calculates what that would look like financially. And so if you take basically 75,000, which is your 3, to 1 of 26, there's your 3-to-1. Perfect. So think of this as a seller. Imagine going to your listing presentations, which I pulled the data yesterday into a small farm. 24 properties went into, of 24 properties, 12 had a price reduction yesterday or within the week. So what a great strategy to take this and go, hey, seller, or listing agent, instead of price reducing at 75, I'll have the same benefits at 26.
So guys, this is huge. When you can just having this conversation with an agent, showing them that rather than going to the buyer and asking for a significant price reduction, you can get a 3-to-1 impact. That means the seller is saving money. And by the way, remember, realtors are getting disrupted too. And if they want to bring value, this is how they bring value.
That's protecting your gates right there. Tell me Zillow is going to be putting that together, or Amazon.
No, you want Amazon proof your mortgage, do what they can't do. And that's connect in an emotional, personal way. And that's bringing strategies like this. So I got to get John on quick because we've got to get some feedback from Jim McQuaig here. Danny, any questions for Scott?
No question. Just a comment that this, based on what Scott just said, this is urgent. I mean, if 12 of 24 houses had their prices reduced, this is something that's very timely that you need to get out and share with your agents and your future agent partners right away.
Boom. Totally aligned. I'm going to bring John on stage here, but before I do that, John, any questions you have for Scott? Do you feel like you got it?
No, I've got a little intro where I'll talk about what Scott did for me already.
Okay, so before I bring him in, I want to remind everybody in the YouTube channel, I now have a playlist called Mortgage Strategies, where I'm interviewing top producers. I'm asking them, frame it, what's the story, what's the strategy, and then they're walking through a seller buy down. So Scott was the last one, seller buy down strategy. I am interviewing top producers, so check this out. And then I also, just like I said, I want to remind everybody, we're here to help you at Mortgage Coach. So we're on it. We're doing this call. I'm going to write an article. And we created a playlist called the Seller Buy Down playlist, or Seller Buy Down Strategy playlist. So as we do interviews, as we create content, there is now a special playlist just for you guys to give you a competitive advantage. So with that said, I'm going to step off the screen, and John Downs, why don't you walk us through what you did here?
Thank you, Dave. Scott, thank you so much. It's pretty funny. I remember one night I just put my kids down. They were like crazy, and my brain was exploding. And I lay down on the couch, and I'm thumbing through Facebook. And there I see Scott's little thing pop up about a seller buy down. And then instantly it clicked, and I remembered in 2006 and 7, I did mostly 90% new construction business. And I was like, oh my God, that was a strategy we used like 10 years ago. Like, how did I forget this? And I think that's a testament to you, Dave, and this community that you put together is we instantly can stay like on like peak form and against all of our competitors out there that do not have this awesome community to fall back onto. So the very next morning, I jumped into the seller buy down strategy and fired off like 40 emails to my top agent partners, landed 5 different appointments where I sat down in front of a bunch of agent teams to explain this process. So Scott, that all came from you, my man, that first post. So thank you so much. So I'll tell you on mine, the way I've structured it just a little. Oh, it's an apple backwards. So in my market, you have, so let's call the average condo price is like $550, and the average single family home is probably $750 to $800. And right now, that $550 and submarket is on fire. So it's still multiple offers, crazy, waiving contingency, settling really fast. So the slowdown hasn't really hit there. Let's call that workforce housing. So then when you look at the single family space, that's where the cooling seems to have started. And then I think in that space, you actually have 2 different segments of buyers, right? You've got the value buyers who they just want a deal. They don't care about payment. They make a lot of money. And then you have the people that are driven mostly on payment, and the people that, let's say they want to reach up and get that single family, and maybe they can afford like $650, $700 in our area, but everything's still selling for $800 and people are stubborn and they're not dropping price. So the strategy that I put together here was one very specific to my market. It's one that we have a term I actually picked up from some website. I've been trying to think of the name. They call these people Henrys, high earners, not rich yet. And it's an investment company that sort of coined it. So if you Google it, I thought it was a good phrase. So that's kind of our market, right? Like it's a 28 to 40-year-old attorney. They make like $180 their first year, $240 their third, fourth year, and then you put 2 of them in a house. So the problem is they just don't have any cash. So a lot of it's low down payment. So the structure I used here was an $800,000 house. It was an 80-10-10. And what I did is I just went normal market rate. If you guys haven't checked this out, we have a slow mouse, Dave. You can click on the reinvestment tab. I'm kidding. And you'll see the breakdown of the second mortgages and the rates that we have. So we have a pretty cool credit union in the area. They have a fixed rate 10-year balloon second, 30-year AM 5.5. So it's a pretty sweet rate. So what I did is I took 80-10-10, 0 point, normal market, 5.25 seems to be about right now. And you would have a payment of $45.94. Now, if they just wound up doing a 30-year buy down, so it's the same strategy, right? Use the seller's money. In this case, you'll see I just picked 3 points, 19 grand on this first trust loan amount only. I highlighted it there. Obviously, the contributions from the seller I highlighted in the bottom as well. And you'll see the rate, blended rate, would drop down to 4.6. So a pretty healthy drop, right? 0.6% in rate, $300 in payment. And if you think just casually talking, if every 100,000 you finance is $500, then $300 is going to be like 60 grand. So off the cuff, you could say, well, if you do a buy down strategy, seller pays that. It's like buying a house $60,000 more expensive for the same payment, or buying a house 60 grand less. Now, the other thing that we've been using with great success now that rates are rising is also digging into just the ARM education. So the third column here was using that same buy down strategy, but using it on a 10-year ARM. And again, the demographics of my market, they generally are in their house 7-8 years tops. So, the idea of a 10-year ARM kind of makes sense. And now that the spreads are widening just a little, the ARMs are starting to make sense, and more so when you pay points, right? So these buy down strategies are just wildly different. You'll see you go from 5.2 all the way down to like it's a full % or a little bit more when you use that same money allocated on the 10-year ARM. Payment drops about $500 a month. And just to put that in perspective, of course, the price versus the buy down on the ARM is $704 grand. That's an $96,000 sale price reduction to have the same ultimate payment. Now, since I've been, well, here, I want to show you one more thing. There's 2 ways you can do the buy down strategy. I've used the one on Mortgage Coach for my partner presentations. And I've gone back and forth when I deal with my borrowers to go over this process. But the neat thing when you scroll to the bottom is it'll show the principal paid in 10 years. And I think this chart is pretty interesting to pull out with people, because one common objection I hear is someone says, yes, I get the buy down, but am I still overpaying for the house, right? So I think this principal paid in 10 years showing that when the interest rate's lower, you're actually applying more money to principal. It's just another leg of, yeah, you know, even if you feel the sale price is there, it satisfies your payment. You're also putting more towards principal, building equity at a faster rate. So I just wanted to point that out.
Hey, John, real quick, before you go off of that, I also want to just touch on something. I just got back from Sales Mastery. Todd Duncan and I have been collaborating, creating content. His brand is high trust selling. And I just want to put an exclamation mark that when you're meeting with a family, whether you're doing a seller buy down or you're doing any type of finance option, when you show people 3 different windows of the decision, monthly, over a shorter period of time, and over a longer period of time, trust happens. And again, our goal here is to help you guys Amazon-proof your mortgage. That means you need to be high trust. You need to trust. So every time you meet with a family, short-term, monthly, short-term, middle term, is an essential conversation. I mean, that is the essential way in any mortgage strategy to deliver it. So sorry for cutting you off.
No, that's great.
I wanted to get it right there.
No, I appreciate that. So, the last 2 things that I've been talking about quite a bit with this, and I know I've been trying to talk really fast here. You can always go back to the YouTube and replay it and slow it down and take good notes. But the big thing, of course, is tax savings. So I think, obviously, if the seller pays that money and those points, you can actually be the advisor of, well, when you file your taxes, that's actually going to be added as an itemized write-off, and you kind of back into what that deduction would be. And then the other thing we've been using is just kind of digging into history, showing sort of like historical rates, what they've done. And obviously right now, every article says rates are going to rise forever, but things are very cyclical. And we kind of dig in and talk about the time of 2013. Those of us in the business, we remember interest rates went from about 3.5 to 4 3/4 in about a 75-day period of time. And just remember the fear that we had that baked in that window of all the people that bought in late 13 and early 14. And we had a lot of these conversations. And then fast forward to 2016 when everyone refinanced their house, and pretty much every house that was purchased back then was also worth 10 to 15% more in many markets. So I think as part of all of this, we have to address the fear. We have to come up with a solution, but we also have to use periods of time and a historical landscape to say, here's how we're going to help you manage this debt in the future. And here's some stories of people in 2013 and the stories of how they unfolded in 2016. So I don't think, although everyone says rates are going to rise forever, I don't think we can just go into that super fear mode. I think we should go back to being the advisor, show lots of options, and give a deep education.
So I had a couple takeaways. I'm going to bring Jim McQuaig in just a second, but he just added something else to the checklist. It's like, document your stories. What stories are you going to tell from 2013? So homework assignment for everybody that's been in the business for any length of time on this call, start thinking of seller buy down stories. Some of those stories are today. Start cataloging those and start kind of creating your inventory of your 2013 stories. So you just added a best practice. Hey, Jim. So Jim McQuaig, you don't have to leave. All 3, let's help out, guys. So you're a branch manager. You, once upon a time, were one of the top producers in the country. What advice are you going to give to your branch, and what advice do you have for branch managers that are listening to this call?
Yeah, I had some other stuff I was going to say, but
don't say anything.
But the thing that I got, the number one takeaway that I got from John was he was at home, he saw what Scott posted online, and it was a great idea, and it could have stopped there, which is where it's going to stop for a lot of people potentially listening right now, if the percentages hold up. But what did he do? He actually did something. He implemented it immediately. He sent out an email to his partners. Before the sun came up the next day, he had appointments. Speed of implementation is the number one differentiator between guys like him and guys that aren't making it happen. Speed of implementation. What are you going to do with this great information? It's great information. Don't leave it there. So that was the main takeaway I got. When you said that, I was just the whole time I was just high-fiving. So good stuff.
Thank you.
It's awesome. I'm here at the MBA with Dave. I actually live here. I'm in meetings all the time, and we're talking with a lot of the aggregators, a lot of the investors around the country, and it really plays right into this. A product that they're really kind of, makes me laugh, they're rolling out are buy-downs. You know, it's a different kind of buy-down than what we're talking about here, but the temporary buy-downs, the 3-2-1s, the 2-1s, the 1-0 buy-downs. Some of you folks that have just gotten in the business in the last 10 years are going, what language is he speaking? And the old dogs are kind of laughing, but that's coming back. Some of you may already have that at your firms, that availability, but pretty much everyone probably should have that within the next 3 months based on what I'm hearing. Everybody I'm talking to is talking about it. So just an FYI, keep a heads up for that. It could be a valuable tool to add to the arsenal. I think it's really a good play for listing agents, much the same way that this is, but also for relocation buyers and for builders. So those are, when you see the buy down talk coming out, they're not talking about this, they're talking about a temporary buy down loan product. But check into it, and it could be valuable for you.
And be the first one in your local market to break the news, you know, videos, Facebook, mortgage coach TCAs, and good point. We're talking about a big buy down. We're not talking about a 2-1 buy down. So, by the way, before, any other questions for John? Anything he didn't cover? Scott or Danny, do either one of you guys have any questions for John?
No, I mean, that was good. That was right on. It was spot on. And it's funny is the margins on your first 2 columns, those are right. I mean, it just, we're compressed, and there's not much room between par, which is your blended rate of 5 1/4, we'll call it, to 4 5/8. So, and that'll spread as the market settles in. But yeah, it was funny. I pivoted right over to the 7 and 10-1 arms. I'm not a big fan of the temp buy downs. I just don't think, you know, spending that type of money to eliminate or just to put in some ease. It depends. Everyone's different. You know, I'd rather do it on a 7 for minimum, you know, and work my way up. But it is what it is. But I think it's good. Spot on. Good job.
Danny, anything you want to add?
Just one comment here, which is the approach, John, that you're taking is, you know, you're anticipating the client's concerns and you're entering the conversation that they're having in their own mind, right? You've been obviously done this enough times, presented enough times to know, you know, oh, they're probably going to object to, you know, am I paying too much for the house? And they're going to have this concern. So you actually have built into your presentation an anticipation of what their objections might be before they even have it, which, you know, Dave, to your point, you know, it's all about building trust, right? And showing that our expertise as distributed retail loan officers is meaningful, and being able to have that approach is just awesome. So great job.
Love it. And he did that, guys, because he's done this. He didn't just do one TCA. He's done multiple TCAs, total cost analysis, seller buy downs within a week. You know, Jeremy started this conversation. Want to remind everybody who's listening to this call, obviously Scott started it years ago, but in terms of the conversation I'm bringing, I had Jeremy on, I don't know if it was last Friday or no, not last Friday, but the Friday before. Jeremy jumped on a call and shared how he was bringing the seller buy down into conversations, which, by the way, he learned from Scott Nicholson years ago, and we're just playing it forward. So everybody on this call, Jim made a great point. Create a seller buy down strategy today. You know, start having the conversation tomorrow. And by the way, the first conversation might be a little awkward. You may not be comfortable, but 3 to 5 conversations from now, you're going to get good at this. Scott, did you have something you wanted to say?
Yeah, and I get this comment rears its head all the time, and it did back in the day, is, well, I'm not in the luxury of, you know, a high balance, you know, rate market. My loans are smaller. They're 130, 240s and so on. But the percentages come out exactly the same. Payment drop 8%, income drop 8%. It's all relative. And then go into your TCA and take a $54 savings and show it over 5 or 10 years on what you've done for it. So I think it's critical, you know, don't make the, well, I'm in a poor market, you know, it works exactly the same. Just, I think it's critical that you go to the TCA and show that money reinvested is a big deal, if that makes sense.
Love it. So Lori, get ready to share one more thing, an ask to the community. I created a post this morning saying, share your seller buy down example in this post. So my ask to everybody on this call who creates a seller buy down, share the link in this specific post. And one, you have my promise that I will check it out. And if I have feedback, we'll give you some feedback. So one of the things that I think, Lori, you're doing this, is where you're creating a seller buy down in the total cost analysis, and then you're putting a video on it that's basically speaking directly to an agent. Jeremy Forcier did that. I'm going to share his example in here. It's already in this channel. I think it's a couple posts down. But please, everybody who's watching this call, the way we learn faster is we learn from each other. So share a link in comments here. With that said, Lori, you are up. I don't know if you have a question or comment, and then we'd love to have you unpack a seller buy down strategy for us.
You bet. Well, thank you, John. Great ideas. Thank you, Jim McQuaig. I haven't seen you in forever, and that was fantastic. I wrote down speed of execution and implementation is how we're going to win in this market, and I totally agree with that. One thing that I want to say to you, Dave, is thank you for bringing us together. You know, we all pay for various coaching programs in lots of different ways, and you just seem to have this innate ability to bring people. I mean, mine is largely Forcier's. I heard him, you sent me a note. I had just finished recording a video to our clients in our database, and I went back and changed it because I liked a couple of the points that Jeremy made. And so I think this community is invaluable to me because it allows me to, I talk to John a lot, but it allows me to communicate with people that I don't see all the time that might not be part of my coaching program, and really make sure that we're killing it and using a lot of the strategies that that our peers are using and some of our top producing friends across the country. So thank you for that.
Love it.
So mine is very similar, like I said, to Jeremy's, because I really loved his strategy and his approach. And I am starting, I just learned this morning about the seller buy down option in Mortgage Coach. So I'm going to go and unpack that this afternoon. But if you, am I screen sharing? Can you see my screen?
I'll tell you when you can see your screen. You need to click that little green box.
Alrighty.
The arrow pointing up in Zoom. And when you see your screen, we'll let you know.
All right, there you go.
Boom, we see your screen.
Got it? Okay. So again, I built the strategy very similar to what I saw Jeremy do. And I'm going to my agents first because I really want them to understand the mechanics of this program. And I was talking to Steve Harney last week, and we were talking about the fact that kind of speaking to John's point about the fear in the marketplace, and that fear leads to confusion. And confusion then leads to paralysis. And in our market in Denver, we're seeing a lot of that. Like, people are just like deer in headlights. Like, I'm concerned about the election. I'm concerned about rates going up so quickly that I'm kind of doing nothing. And they're not actually saying that, but their behaviors are actually showing that. So it really occurred to me that if we can use some of these tools to give us that ability to dispel some of the fear and give them clarity instead of confusion, we can help with that paralysis piece. So the pre-framing for me was just kind of unpacking and thinking through what our clients are going through right now. I've been in the business for 30 years. That kind of tells you how old I am. But we have to remember that a lot of these people that are millennials right now have only started looking at the real estate market since maybe, if they're in their 20s or 30s right now, they've only seen a period where the Fed is intensely pouring liquidity into the market. And so they kind of feel like that's a normal thing. And now that it's going away, the sky is falling. So I've been really focusing on telling people, hey, even though this feels abnormal, it's actually really normal, and it's really good because it means the economy is improving. So these kinds of tools, I've kind of been going back and figuring out how can we get these tools that we've all used that have been in the business for a long time over and over and over again in our careers. How do we bring those front and center and explain that? I have been shocked at the number of agents. Now, some of them are younger agents, in their 30s and 40s that have really never dug into a buy down strategy before. So Jeremy said on his post, or when you interviewed him, Dave, that realtors, we're going to have to do this over and over and over and over again. And Todd Duncan will tell you that I'm the queen of like, okay, I rolled out the buy down strategy. What's next? And so I'm really trying to find ways to hit this from a whole bunch of different ways between videos and different scenarios and different stories. So I think your point is really well taken, Dave.
Yeah, and I want to, so everybody has it on their checklist. I think there's a number of different videos that you'll create to promote and market this. I think there is the seller buy down video. So the way Jeremy did it, he created a seller buy down. He put a video on it. He emailed it to everyone. That's a touch point every loan officer needs to send to every one of their realtors. I just saw on chat Linda Buchanan sent out a BombBomb video. And I look at BombBomb video as like email video. So, video integrated into an email. I think everybody should do an email video. I think native videos in Facebook. I think everybody should do a native video in Facebook with a link to the TCA. So they're getting the combination of your narrative, a combination to the link. So those are 3 different strategies to your realtors, your buyers, to your past customers, to your Facebook sphere. And then I think you want to start telling stories. Like you helped a family with a seller buy down, post that TCA link and post it in a way that has context to your customers. You had a story where you helped a realtor sell a home where they were getting ready to have to do a list. Tell a realtor story. So frame that, put it in Facebook, do an email. And so I think there's kind of like the announcement, which is 2 or 3 emails. And then I think it's just telling stories. So I want everybody to get, this is a playbook. We're teaching you about it. And anyways, I'll recap the playbook that I'm already building out for you guys. But hopefully everybody on this call, it's not like, oh, I had the conversation one time, everybody knows. No, this is going to be through between now and spring home buying season. This is an initiative, in my opinion. Anyway, sorry for cutting you off, Lori. I wanted to share that.
That's a great, I'm writing down initiative. I love that. Okay, so our strategy, we did number 2, Dave. I did record a video in Edge, and then we actually pulled that video into BombBomb and had them people click on the actual video itself just to kind of get it out mass distribution wise. And the cool thing with BombBomb is you can see who's watching that video. And so it's been a great way to, engage with those folks. So this was an example that we did for a $500,000 purchase price, and looking at, rates were 5.25 on the day that we did it, assuming we had a client that really kind of, again, the pre-framing here is assume you have a client that got approved in an interest rate environment that was closer to 4.5% than maybe 5.25. So maybe that was 3 months ago, 6 months ago, last year, and they're just really discouraged. Those clients don't want to take, they don't want to look at a $450,000 purchase price to keep their payment where they'd like it to be. In this case, the payment goal was $2,500. So they're paralyzed because they're not sure where to go from here. So in this case, just showing current market, $500,000 with no buy down, rate of 5.25, that put my payment at $2,658, so $150 out of my client's price range. Cash to close right around $105,000-ish is what we had to play with. So then we compared that to the second column, which is going to the seller and asking for a 5% price reduction, gets us closer at the same interest rate, gets us closer to $2,548. But our seller then takes it in the shorts $25,000. So what we really want to highlight is that last column saying to the listing agent or to the seller, don't take a price reduction. Instead, pay, just do a permanent buy down that costs you $12,000. Our payment now is $2,500, so it's a win for the buyer, and you've only taken $12,000 off the price of your home, so netting you $488 versus $475. To build that out a little bit, bear with me here. We did. Can you still see my screen?
Yes.
Okay, great.
Look great.
Okay, perfect. So because, and it may be when I figure out the seller buy down screen, this may be a moot point, but I wanted to find a way to be able to spell this out to an agent. Yes, I'm going to have a dialogue about it, but I kind of wanted to leave behind that they could really understand and kind of unpack the strategy. So again, we're talking about why should we be talking about a buy down right now? So some buyers pre-approved when interest rates may be lower. How can we help them create a win-win? So I just took basically the mortgage coach screen here, Dave, and said, if we did no buy down versus our price reduction, highlighted that monthly payment at $2,500, helping them to understand that we're still buying a $500,000 house, keeping our payment at $2,500, which was the goal. But the net to the seller is $13,000 more doing it via option B, so that they really understand. Mortgage Coach is such an amazing tool. If we don't have it live, I wanted where they can actually click through to see the cost of it. I wanted something that they could actually take and just kind of study and understand. The number one question that we have gotten from really, really good experienced agents is, help me to understand how I can actually explain this. And so generally speaking, in this market, at this price point, a 500 or a 0.75% in rate is going to cost about 3%. That absorbs my 3% seller concession. One of the things I wanted to brainstorm here, and I had somebody ask me this morning, is how do we advertise this in the MLS? So I have not had a chance yet to reach out to my agents, but I don't know if anybody on this call has done that or not. But again, I was just looking for a way to be able to show that graphically, so that people really understood the benefit of it, really showing the net to the seller.
Love it. Love it. Does anybody have a question or a comment for Lori after that walkthrough?
Yeah, a couple. So when Lori, when she discovers the buy down, which she'll love later this afternoon, how she's going to build it though, she's going to take her, I think it was 13 to buy it down.
12 to buy it down.
Yep. And so when she plugs in those numbers, she's going to plug in 13 for the concession, right? Which is the rate reduction, right? And then she carries that same 13 over for it. So her numbers are going to explode. So her price reduction in fourth column is going to read somewhere in the neighborhood of 40,000, and a price reduction is equivalent to that 13,000 in rate reduction. Because right now she has 25, which is fine. And she angled it correctly back into the seller of or listing agent. Hey, this is your standard, about 25 on this price. We can do it for less. But when you do the buy down in that screen, the numbers they're self-populating and they're actually bigger.
Okay.
Love it. So I want to make a point real quick for everybody on this. And could you confirm you guys can see my screen?
Yes.
All right. So the modern mortgage professional is someone who captures key data on clients and partners so they can customize and personalize multi-channel content. And then they can create services like a total cost analysis, like an annual review. By the way, I added seller buy down analysis. So these are the core strategies. Like if you want to Amazon-proof your mortgage and you want to kill it in today's market, these are the skills that you need to have if you're watching the video, if you're on this call live. And then you see here, I've added based on insights and trigger alerts. So I actually am fortunate today that we're in Washington, and I've got my man Alex coming here. So Alex is the founder of Sales Bloomerang, and I have been running into you with a lot of mutual clients. Oh, yeah. Lori, I think I recently introduced you to Alex. This is Lori.
I just replied to her email right now.
Nice to meet you.
I did not know you were on there.
There you go.
So we're focusing this on the seller buy down, but just give us, we're going to be doing more at Mortgage Coach to help Alex. He's doing a lot to help us because I just believe that I want to help the modern mortgage professional kill it. And part of that is being at the right place at the right time, So could you just give us a 1 minute elevator pitch on Sales Bloomerang and how loan officers can check it out?
Listen, I'll just keep it really, really simple. Sales Bloomerang tells you when anyone in your database is ready for a loan. That's it. It's that simple, right? We're tracking the entire database, your database, not the world, just yours. And when something is happening inside your database, an event that could trigger a financial mortgage event, we tell you about it. Everything from listings to equity, credit getting better, somebody shopping for a mortgage, life events, debt, all of it, plus some other cool and unique intelligence pieces that we can talk about in depth. But that's basically it, right? If there's somebody in your database that's ready for a loan, we deliver it to you so you can have the conversation.
What's the best way for people to connect? Are you on LinkedIn, Facebook?
LinkedIn is the best way, or just my email, alex@salesbloomerang.com, or I love texts, 443-955-2645.
So if you're watching the recording, I'll put Alex's information down below. we're working out of WeWork. He hosted me to do this meeting. I wanted to make sure I hooked you up on that.
Appreciate it.
So
Appreciate
if you have anything else to add while the call's going on, let us know.
Yeah, no, this was great. Thanks for having me on.
All right, well, appreciate it. Yeah, well, have a seat. Yeah. So let's get back on seller buy down. Again, I wanted to bring that in because I think it's an important component. It's so important that I gave it a sentence. You know, when it's defining the modern mortgage professional, it's super important, guys, that you're at the right place at the right time. And it's super important that you can deliver mortgage strategies, not mortgage programs. I also want to show real quick, and then we're just going to go around the room here. Another best practice that I see in the market right now is when presenting options in Mortgage Coach, more and more I'm seeing loan officers always show a 2-point option. And a couple best practices that I picked up from Jay Crowell is one, label them as strategies. Don't just label them as mortgage programs, label them as actual mortgage strategies. So you notice strategy A, strategy B, strategy C, always show a 2-point option. And then remember, guys, the way we build trust is we show monthly options over 60 months, over a longer period of time. That's how you build trust. You know, you got to emotionally connect with folks. And remember, you want everybody to see this. So make sure you are sharing the link to these total cost analysis when it's a story. Obviously, if it's a family's personal information, we're not sharing that unless it's Facebook Messenger. But you should be creating mortgage stories, mortgage strategies, and then posting that through Mortgage Coach. We actually made how it shows up. We upgraded it. I don't know if you noticed this, Lori. It was actually an ask from Kelly Zippo for a long time. She did not like the way the link showed up. So now when you put a link on Facebook, this is what it shows. You know, click to open your Mortgage Coach experience. Make sure you frame it. You know, this is where you put in your headline and you position it so that your clients and your realtors click on the link. So great strategy. So guys, we've got about 8 minutes left. It looks like Jeremy's realtor meeting is going a little long. I just want to make sure, Jeremy, are you on the call? So here's what I'll do, guys. One, if you're on this call and you were here because you want to hear Jeremy's story or strategy, I'm going to put a link down below to my last interview with Jeremy, and then I will also get Jeremy on a call, and we will record a 10-minute. You know, Jeremy, now that you're 2 weeks into this seller buy down strategy, what are some of your scriptings? What are some of your nuances? So stay tuned. We'll be sharing that on the Facebook group. And if you're watching the link, there'll be a link down below to Jeremy Forcier. So I'm going to throw it to the audience. Guys, any questions for Lori after that presentation? And also, Lori, is there anything else you want to share before your time is up? Lori, you're muted.
Muted.
Sorry, I'm just literally days into this. So we actually found the 3-2-1 temporary buy downs, and it made me think about the permanent buy down. And so we're just like, you know, I heard it and decided by the end of the day, we just need to get going on it. So I echo what Jim McQuaig said, and that's take this stuff and run with it and figure out a way. You're going to stumble, you're going to fall, you're not going to say it exactly the way that you want to, but Duncan says focus on direction, not perfection. And so take it and run with it, whatever that means to you. So.
Hey, Lori, I know you also had your marketing team put together a flyer. You want to share your desktop and show us what you created? Because I'm also looking forward to seeing what our community does. Remember, there is the Mortgage Coach seller buy down link and strategy, and think of that as the strategy and the story. But remember how you frame things, how you pre-frame things, what you say before you deliver it sometimes matters most. And so, Lori, I'll let you know when we see your screen, and if you could show a flyer that you and your team just put together.
Yeah. Can you see that?
Yeah.
Yep. It's the same.
The seller buy down could be a smart move. I love that.
Yep. Yep. And this is, again, just I wanted to leave behind that. I thought you guys were seeing that before. That just kind of helps them understand with words. We're going to actually absolutely talk through it, but I really wanted to understand how we can net in this case. And Scott, I can't wait to play with the actual seller buy down screen, how we're netting the seller $13,000 more and giving the buyer the payment with it that they really want.
Yep.
So one of my suggestions, guys, is this is like the kickoff. I would have an accompanying TCA to this. So you have the flyer, any of the TCA that models this, so that the realtor can see that link. And then a story, like 3 weeks from now, come up with an amazing story where you help the realtor avoid a price reduction, you help put a buyer in a house that they couldn't have otherwise gotten without this buy down. And then you have the link, you have your video on the Mortgage Coach link, and then you create some other marketing around it. I think is a super good idea. And I'm really looking forward to see what the community comes up with. So John Evans. Oh,
one thing, Dave, before you go, sorry. I have been naming the link instead of, usually we do, I learned from Josh Metal, we would do, John and Megan's purchase numbers so that we actually had their names in the link. And this week I've been naming them, wish rates were 4.5%, click here. Just for something kind of fun to do something different with that link. So FYI.
Nice headline, and looking forward to hearing what headlines are out there. John, any thoughts so far? Anything?
Yeah, so there was actually a question on the chat that came up and said, when are you presenting this? And Lori, you spoke to it where you said, let's say this person was pre-approved back when rates were something, and then it made me think of maybe what could be like a really cool Facebook post video is like an intro to Cher singing "If I Could Turn Back Time," right? And then, bam, you can. No, I won't. Yeah. But no, I think that answers the question. The idea was, it's one of two things: how to sell stale inventory, but it's also how to alleviate the concern when that call comes in. Like I've been realizing recently, and I think there was a change in my conversion recently. Where when you're the first person that like punches someone in the gut with a high rate, they hang up, they feel defeated, they call their mom and dad and their friends, and next thing you know, they're shopping the planet and they're online. But if you say, yeah, rates have risen, but let me show you this. We can actually turn back time with right? And maybe that's a good pivot to bring down the blood pressure and just make them feel like, oh, it's not the end of the world. Yeah, prices are high, but they're high for the right reason. The economy's strong, and you sell some fundamentals. And then you talk about how you turn back time, and maybe we can get the seller to buy those rates and act like it's, I don't know, June 2017. Maybe that's a spin.
So the person who asked that question, I just want to make sure you're getting your question answered. And by the way, guys, we're at like a couple minutes. If you have some questions, bring them in. But there is a buyer conversation. So there's a way to have the seller buy down conversation with a buyer. There's a way to have the conversation with the buyer's agent. So hey, buyer's agent, you want to look like a genius to all your buyers in your funnel? And here's the conversation you have. Here's the message that we're going to send to all the buyers that you're working with. So buyer conversation, buyer's agent conversation, buyer's agent marketing campaign. And then there's the seller's agent conversation. And then, hey, there's seller, go back to all the listings that you presented to in the last 3 months. Here's the conversation you want to have with them. So guys, there's like 1, 2, 3, and I know there's probably 5 conversations that we all need to master. And by the way, what are they going to generate? They're going to generate loans, business. You could crush it this quarter, and you could be the only one in your local market doing this. That's what we're here to bring you, a competitive edge in this market. We got 1 minute left, guys. Danny and Randy, any thoughts listening in on this? Any big takeaways or leadership you have for the community?
Yeah, I mean, Lori, you said this without saying it. A confused mind does not act. This is an enormous opportunity for you to take the fear out of the market, because there's so much information out in the ether for our clients to be afraid of. And most of it is just BS, frankly. And there's ways to navigate around it. So fill in those holes will get filled in with dirty water if you don't fill them in.
Yeah.
Love that. Those holes will get filled in with dirty water. So get on it, guys. Scott, any thoughts you have as we wrap up today's call? Closing thoughts?
No, I think it was good. Shoot, we'd probably go another hour and all this. But I think the big thing is with this is it levels the playing field for the loan officers. And if you think about it, because anyone can compete with the Lori, the Dannys, the Johns, the Forciers of the world, from your guy that just started a month ago that you welcome to the Mortgage Coach community, embrace it, practice it, roll it out. They could actually compete leg to leg or arm to arm, whatever, against a high big producer. So that's why I love it for the little guy to take on market share with this thing. And that's why just implement it, roll it out, and go compete with the big boys.
So all you new loan officers, did you hear that? This is a way for you to elevate your game So I want to go 1 minute long. John, I'll put you on the spot. The script, how are you opening the conversation with the agents you've had? What's the 1 minute scripting? I just want to make sure we nail that. I saw 2 people ask about scripts.
Yeah, so mine has basically been, so again, DC, they're a little bit late in the slowdown. They're just sort of feeling it, but they're not yet embracing it. So my script has been, look, it's happening around the country. I think we should get ahead of it. You can be selling something that no one else out there is. If you have a stale listing, you can be ahead of the curve. Have some shock and awe on your side. So let's dig in and tell you about a strategy that we used with perfection back in 2006 and 7 as things were starting to slow.
Boom. Great script, guys. So I will be bringing more to you. If you have questions, ask those questions at this point. Either you're watching this on YouTube, down below in comments, feel free to ask questions there. Also, we will push this on Facebook if you're on Facebook and you are in our group, Mortgage Coach, Productivity, Mastermind. That is the best Facebook group for mortgage professionals where the best get best faster. If you liked this video, if you got value from it, please give us a like down below, both on Facebook and in YouTube. And any managers on this, I mean, this is where I would recommend scheduling a sales meeting. It's time to get good. It's time to get after it. If you are a manager and you lead loan officers, it's time to schedule your own seller buy down playbook for blank, your branch, your company. Hopefully Mortgage Coach will be part of that conversation. I'm here to serve. Everybody who came on this call, really grateful for you taking time to learn from Mortgage Coach. And this call is a wrap. Take care, everybody.
Thank you, guys.
Thanks.
Take care. I really appreciate you guys.